Hello, this is Quant Trade Edge, and we are doing the daily wrap-up for March 15th, Tuesday. So the main trade we had on our mind today was the Euro long, and I dropped a video earlier this morning detailing it in real time. And the reason for that trade is a lower high, lower low, which, as you know, in our scalping method would even, would show a good scalping opportunity. But this is our 4X method, where after this move up, this move down, change of direction, and again looking at Taylor method, during yesterday's change of direction, we already got the 2-period ROC to flip up. So that typically means, the rhythm would be one up day and then sell above the high of that up day the next day. One thing that I maybe didn't take into account, and there's also just good trades fail, right? That happens. One thing I didn't take into account also is that tomorrow is FOMC. So typically ahead of FOMC, you're probably going to get a lot of chop in something as significant as the Euro, because there's kind of people positioned on both sides, and there's a lot of room to shake the tree on both sides. But, that aside, this was a beautiful setup, and I even discovered more confluence afterwards. Well, I guess it's not really related confluence, but just something important that I think if you've been watching these videos, you'll recognize with me. So, taking that away and adding P1, we had this downswing, and then we had this two-legged upswing. And then we had this downswing to here. So we were looking at this as our ABC and this as our risk bar. And it happened to coincide with a P1, it coincided with a 5-minute hoagie, it coincided with 2-minute divergences. There were a lot of beautiful things about this. And, for a little bit it did go up. This is what, 1138.5. You got a little bit over 1R to the upside, and then it came down and flushed out on the 830 bar. So the 830 to 845 is right when the pit stock market opens. So that caused a little shakeout, and then there was a further shakeout to this point right here, which is 110. This was it. I'm sorry, right here, 110, 10.5. And that number should sound familiar to you because when we had the short setup in the Euro a few days ago, and there was a sloppy move to the upside that was kind of hard to count and catch. Here we go, there it is. We had a sloppy move to the upside, and we would have been looking for... we got our break down to the downside, and then we're looking for 2 legs to the upside, but this is technically 1 leg, all the way to here. And I remember, if you remember my entry, it was not very standard, but it was, these 2 touches of 110, 10.05. And so when that finally broke, that became my entry to catch, what we knew was the direction of the day. So that number stayed fresh in my head, and it's the exact same level at which we found support, and when it broke, we started to get further downside. But at this point, I'm just staying away from Euro because now that I remembered in my full consciousness that FOMC is tomorrow, that's not something I want to play with ahead of time. In fact, I'm probably not going to do the 4X trade tomorrow ahead of FOMC. But I am going to stay aware of it, so that way if there's a short-term move in the direction, that our daily direction 4X tells us, I'll be ready to execute on that. The other thing, and I dropped another video of this today, is the trade in crude oil. And at the time of the video, I showed you how we were able to catch this very close to the bottom. And I noticed 2 things that I thought I'd point out. We had a hoagie at the bottom, and a hoagie is just a form of balancing. So we had this down move, some balancing, which helped us launch. And then, in part of the second leg, this was two very clean legs to the upside. One here that had a very weak down leg, very, one bar down leg. And then we had this leg here. And the reason the legs are drawn that way is, this is a hoagie right here. So it's like we had a hoagie where the momentum changed from down to up. We had a continuation hoagie here. And then you guessed it, right at the top, there's another hoagie, these two bars inside of this bar, and that served as the top. So if we were mechanically trailing this up, once we took out this hoagie up top, that would have been our sign to exit. And since then, we've had this leg down, then it became a little choppy on this reversal here. You kind of had some mini waves, and it looks like we're getting what is the second major leg down right now. So that's crude oil. And the only other thing of interest I saw today was gold. Gold and crude are acting very similar on a, given the war in Ukraine. Both of them going up has been a sign of the war getting worse. Both of them coming down has been a sign of, perhaps some reprise there. But going back to our teachings or our learnings on the U-turn, right here, this was 930 to 955, and then a down bar, and then an up bar right into 1030 to 1035, which again, this is our European closing zone. If I were to draw a rectangle around it, we'd say, around here, Europe is closing. So this was the final push down in Europe. We got an ABC up. And so that's a good time of day to look for a U-turn trade. And on a U-turn trade, you would basically just buy stop the high of that bar. And the high of this bar was 1921.50, and we basically got no heat up to 1929, so about $7-8 of no heat. And we can break it down further into a 1 minute chart and really measure the heat. We have that yellow box to guide us. There was no heat, right? This is your 1 minute bar. You went straight up to there. So I'll take a quick look at things that are setting up for tomorrow, but again, keep in mind, the context. Just like today was not a good day to go long the euro because of FOMC tomorrow. FOMC is tomorrow. So again, I don't necessarily think these are going to be great things that you want to just mechanically trade, but you want to be aware of them. The indices are having a really good setup bar. This low is 41.30 and a quarter. We got down to 29.5, 3 ticks below. So I consider this kind of a trap. And then we also have a nice long lower tail. We also have a green candle. We have a lower low and a lower high so far. If this becomes an outside bar, it's slightly less attractive, but I wouldn't be surprised because it's FOMC. Outside bars are a sign of indecision, and that's sort of what we have a lot of right now. But that's a good setup bar. And similarly in the other indices, NASDAQ has the exact same thing. You've even got the tick below that bar there, and all the other same characteristics. Russell, same thing, tick below this bar. It's not as strong in terms of engulfing the majority of yesterday's day. So if I were to do something tomorrow, I would probably stick to the S&P or the NASDAQ. The British pound looked interesting. The British pound, this is technically an outside bar because they share the same low and it put in a higher high. So that would be interesting if we took that out to the upside, if there would be a play for a Forex play. But again, the dollar is center stage with the FOMC meeting, so I wouldn't expect currencies to want to pick a direction and run ahead of time. Gold is not setting up yet. That's not a great setup. Crude is not setting up yet. Copper, potentially. It's not ideal. The day's not over. If that turned green, it would look a lot better. And then Australian dollar, which, there we go. After a couple of big days, if this can turn green, that might be a potential one, with the same caveats of everything else. So that's it. Fairly uneventful day to day. The Euro Forex setup didn't work. There were several ways on a crude to make that back, and gold U-turn is just more of a scalp. But and then again, setting up for tomorrow, there are a few things that look good, but keep in mind FOMC is the main thing. Usually a lot of two-way action that shakes out the longs, shakes out the shorts, frustrates everybody, and then the day after FOMC is when you can potentially get a really good trend one way or the other. So that's it for today. If you like the analysis, drop a like, subscribe, ask me questions. Happy to chat.